But Pashupati Advani as well joins in on the show. Pashupati, hi, afternoon. Have you been buying the market just yet? Anything that you may have added to the portfolio?
Well, it's been a quiet time, and as you said, I mean, the markets came off a lot, reached almost close to 22,000 Nifty, and is now back almost at 23. So that's great. But I think we're actually range bound. But I do see merit in maybe looking and trying to scavenge in some of the defense companies, because given that the world looks like it's going into World War III, and I don't know if we're prepared. So definitely defense companies are something that we should be looking at. They've all jumped up very heartily today, but I think that this is a trend that's there because we have to spend money on that. We are, I think, behind in the game. And I think that, we can't depend on Russian or American armaments, particularly if the tariff barriers go up. So that's my thought as to what to be looking for.
Right. Okay. That's the take on markets. But in the meantime, the former CEO of Microsoft, Bill Gates, is currently in India. He visited the parliament as well today to meet Health Minister JP Nadda. Gates had a chat with Nadda on present healthcare situation in India. Remember, Gates Foundation has been involved in several health welfare initiatives in India, including a partnership with the Indian government for the immunization programs as well. In fact, Aishwarya Patil, my colleague, is here on more as to how his meeting has turned out to be.
Well, it's no secret he is one of the most influential tech entrepreneurs that we all know globally, in fact, and he spent a lifetime building Microsoft as well. But now it seems like the focus has been steering towards his philanthropic journey with Gates Foundation, and this whole visit, of course, even in his post 4 days ago, he mentioned that it will be focusing on Gates Foundation and its partnership with corporates, local companies, as well as the Indian government. Now, as you mentioned earlier, he did meet with Prime Minister Narendra Modi, Union Ministers JP Nadda, Ashwini Vaishnav, Shivraj Singh Chauhan, and you can see the portfolio as well there. That is emphasizing clearly on healthcare, agriculture, rural development, and emphasizing on making a global impact as well. Now, this visit marks his third visit in the last 3 years. So clearly a lot of interest in India's growth as well. So what all has been discussed so far is India's roadmap, Viksit Bharat Roadmap 2047. That's been on the agenda. Progress on healthcare, agriculture, AI and other sectors were on the agenda as far as all the meetings are concerned. He also said that India's advancements in agri-tech focusing on climate smart farming, increased crop yields and nutrition enhancement. Apart from that, as far as rural development is concerned, a big highlight has been given towards women empowerment and tech adoption with a focus on India's Lakpati Didi initiative. We've heard that a couple of times even in our past budgets as well. So that will also be one of the key focus areas, and MOUs with the Gates Foundation as far as India's AI mission is concerned and healthcare as well, to enhance affordable and accessible healthcare. Apart from that, all in all, Bill Gates did mention in his post that Gates Foundation has been actively working in India. He's here to see what's next, what's changing, and what can be done in collaboration not only with the Indian government but also some of the local corporates here.
Okay, that's interesting, and be sure we've got a network exclusive interview as well with Bill Gates lined up later on in the day. But back to markets, let's see what's looking interesting right now. You've got a Prestige which is holding up very well. There's Policy Bazaar, there's Titagar. All these names are looking quite smart. Kunal, earlier today we were talking about yesterday's movers, the likes of a Paytm, PB Fintech, today this Policy Bazaar, and of course Zomato as well, which spurt up quite nicely yesterday too. Anything where you feel that, there's conviction to buy?
Yeah, I think even further from current levels, Policy Bazaar, Paytm, these stocks, I believe, should see a more higher traction from current levels, because these stocks are poised in a different manner. Some of them are trading above their averages, some of them are trading at much lower levels in terms of price support. The volumes in the last 3-4 days has been much on the higher side for these names, and even in the last leg of the sell-off, say in the first week of the month of March or the end of February, the volumes were pretty much on the higher side. So which means that the rest of the fall for these stocks has been immediate on the back of higher volumes, and then the build up towards the rally is also on the higher volumes for these stocks. that generally is a very strong indication that we are looking at a formidable bottom on the near to medium term charts for these stocks. So I think even after this 3-day rise of say 5-7% broadly for these stocks, I would still believe that they could be an attractive proposition from a short term play.
Pashupati, what are you feeling about this entire, new age tech space, if we can call it that? They too have corrected in the recent market fall, but a Zomato, a Swiggy, PB Fintech, Paytm, anything that's looking interesting to you?
I think they're all worth looking at and worth nibbling. I think I missed the bottom, but I think that they're very much here to stay, and as long as they're here to stay, they're pushing all the smaller players out, and I think that means that they're definitely worth a buy, because they'll get more and more traction as time goes on. The other thing that's happening is that we're also seeing some move towards the traditional industries which the government is still continuing to back, like infrastructure, like steel, like cement, because road building is still going on, real estate has to be finished. So those programs are still going on, and the government is still the major spender, as opposed to the private sector, which has not actually really started expanding too much. Few companies have, but most of them haven't. So I think that's another thing to look at, and that's another place where money is being spent, and that will turn to returns. Aisha?
Right. Further to that, Pashupati, I was just hearing my colleague talk about what the management communication from Interglobe Aviation has been. But what is the best way to capitalize on this entire, trend of Indians traveling a lot more? Is it via hotels, or do you think you would stick by with an Interglobe?
Well, Interglobe has jumped a lot, and I agree that I personally think the numbers are really optimistic, because to double in whatever 4 or 5 years. Again, new players. Air India is going to be a serious player. It already is, but it's just getting its act together. It doesn't have planes. If it had planes, I think they would be going head to head with Interglobe. But I think Air India is going to be a significant player, particularly since Air India also has a lot of very good international routes. So, I think that it's going to be the full service versus the budget airline. I don't know how the other budget airlines are going to do, but I think that they will also have a place. But honestly, 500 million for Interglobe alone, given that today they have 50% of the market, that means 1 billion people traveling. Wow. Are our airports ready? So maybe we buy airports if we can.
Well, I think the problem is how shallow both aviation and airports are when it comes to the listed pool. But yes, get your point completely. Let's just look at what some of the FMCG names are up to, and whether or not this was just a tactical move when the markets were falling hard, or is that strength or move looking sustainable at all. Let's just see the last 1 month or year-to-date charts for the likes of not just ITC, but even for a Britannia, Nestle, and more so the rural plays, the likes of a Dabur, Marico, or a GCPL, etc. They've done nothing actually in the last 1 month or so. In fact, some of the names like a Dabur have fallen about almost 5% or so. Naresh, anything from within the staples that's looking interesting, or do you think that's not such a high beta space now?
So this is a space which has seen a large correction, but we are not seeing recoveries come back very sharply. So the only name which looks interesting is Godrej Consumer. That's seen a correction, and I started seeing a recovery in the last 3-4 sessions. So I would only go with Godrej Consumer in this space.
Okay, that's the take coming in on some of the FMCG names. Other than that, just want to look at what a Kotak Bank is up to, what ICICI Bank is doing right now, given that, that big spurt in ICICI Bank yesterday and the way that it supported the index. It's standing put at that 1300 mark. Pashupati, it's almost a consensus, right, when it comes to private banks, and Kotak Bank has taken the surprising leadership and has begun that move in the last 1 month or so. But where is it would you be comfortable within the entire large cap banking space? And I'm going to throw in an SBI as well into that list. Where would you be comfortable putting in extra money to work?
I've always been a great believer in SBI. It's just a function of they're just so big. It's very difficult to unlock value of their depositors, of their client base. But they're gradually doing it, and I think that's what's making them be a big player. The other thing is, is it worth taking a punt on IndusInd Bank, which has had a few problems and has dropped quite a bit? That's also a very speculative stock, but that also would be worth considering, simply because I think the bank is okay. That's a personal opinion, but I think it's okay. So I think that it might be worth it to as a trade, and then we'll see what comes out as things come along. But I'm glad that they've actually put some numbers on the table. They had some losses, which I guess they were trying to push off, and then finally they decided to declare it. So I mean, that's always a good sign. And of course, HDFC has been the market leader, and any new money is going to continue to come into HDFC and maybe SBI and ICICI as a first. So I think that's good for all of them.
Okay, that's that on banks, and of course SBI, which has also been quite strong of late. But let's get in some BTST ideas as well going on that note. Naresh, what's on your list?
So first is a buy on PFC. The stock has broken out above 400, multiple bottoms at 360. Stop loss at 399, target price of 415. Second is a buy on Oberoi DLT, which has seen a 25 to 35% correction from the top, making a recovery move today. Stop loss at 1600, target price of 1660.
Right. Kunal, what about your BTST ideas?
So I'll go with the buy on Siemens. That's a chart which has started to look attractive. In fact, after the last 4-5 days of a price correction, the risk reward starts to look very attractive, close to this 5,100 mark. So we'll look out for targets in the range of 5,500, stop us at 5,000. And the second is a high beta stock. It's a buy on IEX. And I sense that the stock is on the verge of a breakout, yet again of a double bottom formation. So we'll look out for targets in the range of 178, stop us at 162.
Okay, that's that on, some of those BTST trades. But the one space which has been doing quite well today has been the entire steel space. And let's, shift focus and talk about what's been happening in the steel sector. The likes of ASAIL, JSPL, JSW Steel, all of them have been abuzz on the back of the DGTR's safeguarding duty of 20%. We chatted with Axis Securities' Aditya Welekar as well earlier today, and he thinks that there's a scope for steel makers to hike prices by another 1 to 2,000 rupees per ton. Listen in.
Without the safeguard duty, the imported steel prices are trading almost at parity with the domestic HRC prices. And if we go ahead and impose 12% safeguard duty, then that gap between Chinese steel and domestic steel prices, that gap increases to rupees 5,000 per ton. So there is some buffer for steel mills to increase the steel prices because of this gap which is emerging. So ideally, means this gap is most of the time the gap is there, and with this emergence of rupees 5,000 per ton gap, the steel mills can further go ahead and increase prices to the tune of 1 to 2,000 rupees per ton.
Right. Okay, that's the take coming in on the entire metals pack. Pashupati, you won't look at any commodities, would you, right now? Metals, cement. Many believe that there is merit in, how much of a bounce could come in these sectors.
Well, I actually haven't sat down, but I probably should sit down and see how much we are importing versus how much we're producing. Because I think this is going to be the game where any commodity that we get that is an import substitution is going to be worth buying, because obviously people will have to pile into it because tariff barriers are just going to make it too difficult to import. So, if you do that analysis, I'm sure you'll find, maybe steel obviously will have looked at, but I don't know whether aluminum is on that list or not. But I think that, the tariff barriers, according to me, are here to stay, and there's going to be some pain coming up over the next 3 to 4 months.
Right. Okay, that's the take coming in on metals right now. But I think, Pashupati, the other question is also, what do you stay away from? And it seems like it's kind of obvious there, or at least market has handed out its verdict that it's definitely IT. There are too many moving parts. What happens to US growth? The advent of AI, how that evolves. Seems like IT is avoidable right now. What are your thoughts?
Yeah, I've been bearish on IT. I think if you take out my interviews for the last 6 months, I've really not liked IT at all. The reality is that the US is not going to let more jobs be created in the US. There's definitely that tariff barrier which has always been there. They're being difficult about visas. They're being difficult about even giving work. Plus, as you mentioned about AI is also taking some of the jobs away. So I think it's going to be a tough time. And I read somewhere that some huge number of workers, 40,000 or 50,000, were going to get laid off by the IT industry this year. So that's not a good number, because normally they hire 20 to 30,000 each company, and the big ones. And this year, if they're going to be laying off 50, 60, that's not good. So we shall see. I mean, the space is changing. Whether Indian IT companies can actually change to reflect that and remorph themselves to new businesses, time will tell. Out of the IT pack, I would say the one that seems to have been performing well is HCL, but who knows?
Uh, on that note, Pashupati, what's your entire thought on which way the US may be headed and the markets is what I'm talking about? There's definitely been a little bit of an ebb off on the US dollar. I don't know whether it's still going to sort of, continue to hold the crown or not. But the equity markets, I mean, some of the most fancied names like a Tesla, for instance, they're off a good 50% from their recent peaks.
So what's happening in the US is that demand seems to be slowing down because people are actually scared. They're scared of losing jobs. There's a lot of fear in the US about what's going on. There's supposed to be a Fed meeting today. I don't believe there's going to be a rate cut, which is also not going to make life any simpler. Yield spreads are also all over the place, so that's also not a good setup. So basically, we've got the US market in a bit of turmoil. The big winners, which were the big IT stocks, have gone for a toss. So now let's see what happens. And I'm not optimistic about the US at all. However, money is going back. Money is going back into debt. Money is going back into creation of new industry. And so who knows what's going to happen there.
Right. Okay, that's the take coming in on IT. Pashupati, we'll let you go on that note.